Hello and a very warm welcome to everyone. I am Shreya Agrawal and you are watching our series Winning with Antifragility. Today is our last dispatch, in fact. We have a special session, and so rightly put it, investment disputes, looking back and looking forward. But before I deep dive this very August panel, let's do some context setting on the same. Outside of the armchair perspective we have when it comes to programs like Shark Tank and Dragon's Den, investing can actually be quite challenging with a myriad of problems that may arise. These can include state level and central level laws and requirements specific to various sectors in India. It only gets worse in the face of litigation or when arbitration is required due to issues like mismanagement or control. According to one study, the regulatory and litigation risks for private funds are greater than at any time since the financial crisis in '08. And why so? The proliferation of digital assets and cryptocurrencies, the spotlight on ESG investments, and the greenwashing it breeds, and the booming activity in SPACs are all new developments that present enormous challenges for shareholders and investors. Case in point, the Amazon Future Group dispute is one of the many that arise between shareholders that really begs the question, what are the risks faced by investors and shareholders that can be mitigated, and what strategies can be devised to efficiently handle shareholder disputes? To break it all down, please help me welcome Himanshu Dudeja, Managing Director and General Counsel at Blackstone Advisors India Limited, Akila Agrawal, Partner and Head of M&A at Sulamachan Mangaldas, and Amita Katragada, Partner in Disputes Sulamachan Mangaldas. I think the women power will be unleashed today on this panel, and it's the last panel. I'm looking forward to having a very meaningful discussion. And for the purpose of discussion today, we have divided it actually into three parts. One is the investment dispute, the shareholder dispute, and the regulatory dispute. I would like to begin the discussion with an investment related dispute, and sort of over to you, Himanshu, and we've spent about 15-20 minutes here. And the opening question really is that what we saw in the last sort of 18 to 24 months, what have been the major triggers for dispute issues arising between private equity investors or the shareholders and entrepreneurs or the board? What really were the key triggers? What are the cases that have come to the fore? What really is the sense that you're gathering? Yes.
Sure. Thank you, Shuja. Good morning. Good morning, everybody. Thank you for joining us on a Saturday morning. I know it must have been tough for all of you. I hope you have your coffees and teas alongside. Um, uh, so, answering your question, Shuja, I would say just stepping back, just setting the context right for this conversation. What has happened in the last 18 to 24 months when you look at India or Indian market? I would say it is only become bigger, better, and stronger. Sun is shining quite bright. And these are statements which can be empirically confirmed by the number of inflows that we are seeing, the kind of interest we are seeing from strategics, private equity players, VCs, and many other verticals, so to say. And I would say, in the context of this topic, there are few things that are really coming out very clearly. As in, I would say thematically, there are four themes that are coming out very clearly, which is all making us feel very euphoric about where Indian market is poised. Number one, if you think about ease of doing business in India, contract enforcement has always been a problem. Where do we stand today? I would say that contract enforcement timelines have really shrunk. When you talk about dispute resolution, people have become smarter, parties are far more sophisticated. You have very efficient and very competent judges who are presiding over the tribunals, and you're able to get the dispute resolution done in a very, very timely way. So timelines have become better. It's a different thing on the enforcement, which we will talk about later. Number two, the courts have always admired and given a thumbs up, especially the Supreme Court of India, to really recognize that notwithstanding the stature of the parties, notwithstanding the public policy argument, contract is a contract and you got to give effect to the contract, period, which is absolutely remarkable and much lauded, especially from a foreign investor standpoint, which brings in consistency point that we've been talking about for decades. Number three, very, very important, the quality of regulators and the engagement that we are seeing from the regulators today. I would dare to say that they have become partners to really how things are done in India, as in the outreach by the present government is absolutely next to none in the world. You talk about Gift City, you talk to ministries, you talk to SEBI, you talk to RBI, you talk to CCI. Everybody is leaning forward to help you do the business. Yes, there are nuances, there are some complications as you would always have in any part of the world. But for the first time, I'm seeing that the train is moving in the right direction. And all of us are driven by a common agenda that how can we make India a better place for investment and a better place to become a hub in Asia insofar as private equity investments are concerned. So that's number three. Number four, I would add the rise of proxy advisory firms and the theme of ESG. If you really talk about it, these were non existent sort of items or terms 2 years back. In the US, in the UK, we saw a lot of that. But these days, if you really compare the quality of our engagement with the proxy advisory firms, or bring in the element of governance as part of ESG. ESG is a separate topic, but I'll focus just on governance. So if you align your interest well with the management, with the other stakeholders, internal stakeholders of the company, employees, creditors, and so on and so forth, and then do the alignment with the regulators, the external parties. Today, the market gives you premium for a better governed company. You're lauded first. Same IT company, same manufacturing company, not same, but I would say in a similar space. One would trade at a multiple of teens, and one would trade at a single digit multiple. There is a reason for it. You don't have to be a rocket scientist. It's governance, governance, and governance that's coming to the forefront. So all of that put together, as I said, the sun is bright and shine. All of us are moving in the right direction, and we are becoming deeper and far more sophisticated than some of our peers in the region. Why don't I
Thanks for
pause there?
that. Thanks for that, Himanshu. That's sort of very, very well put in terms of opening and how sort of you see. You said the train is moving in the right direction. You seem to be seeing it the first time. And I think the floodgates seem to have opened. I mean, there is unicorn obsession across the board. A number of unicorns are rising. But you also said that, Shrija, it's no rocket science. There is premium to a company which is well governed. And you said it's governance, governance, and governance. And of course, the spotlight now being on ESG. So that sort of really naturally segues into this question of there's a debacle now playing out without understanding and going deep into that one organization. But really, the question to really pose now with so many companies becoming unicorns more and more, talking about technology dominance, and some of these companies also vying for a public float, one can really argue, is it anti-fragile, is it sustainable or not? But really, what is the role of the board in a high growing startup, especially when governance issues are raised? What remains the role of the board there? If you can spend some 5 minutes on that, and I can also have Akila and Amita also sort of weigh in if they have some viewpoint in that direction. When you're a high growing, technology oriented unicorn, blitz scaling, absolutely obsessed with chasing numbers, some can also go into GABA, become an eccentric founder, and all of that. But really, I mean, what is the role of the board in some of those companies? I'll begin with you, Himanshu, and then get on to the ladies. Yes.
For the first time, I'm going to take pride in saying I claim ignorance on any specific item that you're talking about. But on a serious note, I will sort of go a little beyond than just the role of the board, which I will talk about. But I think it's a role of investors as well that needs to be discussed. Investors don't just bring in or shouldn't just bring in quality capital. They have to bring in a lot more than that. But I will touch upon that in a moment. First, let's address the board part. I think the case in hand or any other situation that you may be referring to, without commenting on that, without even having the insight to it, just keeping this topic on a standalone basis, nothing has changed. As a board, as I said, there have been many larger deals which have gotten stuck because of how the board has really progressed or given treatment to one shareholder over the other, and so on and so forth. So let's just make it a wider conversation for the purpose of this audience. And I'll say the theme that we follow now, and in fact, we've been following it right from day one at Blackstone, after having invested almost like $60 billion with 35 portfolio companies where we are fully invested, 25 companies we have exited, that what doesn't feel right is not right. And what I mean by that is don't really look at the form of law every time and say, hey, I've got a legal opinion. I've got this point of view from a lawyer, and therefore I am good on this. Now we are talking about public conscience. We're talking about retail shareholders in a very, very different way. We're talking about ESG, as I said. So, all in all, I would say that the role of the board is not only restricted to or influencing the other stakeholders to just comply with law in letter. It has to be in spirit. Are you doing justice to the society? Are you being conscious about the other stakeholders? Are you really a market leader on governance and E and S part of it, which is environment and sustainability? So all of that, and role earlier I would say of the board was just to sit in the board meeting, see what the agenda is, and make sure that everything is compliant. Now, the sophisticated board says, how can we make this India Inc.? How can we make this present board or the present business a world class business? That's the theme that we are seeing at the business side. On the legal side, at the same time, the board members are becoming far more vigilant about things like related party transactions, about approvals, about disclosures. There was a saying, and I used to laugh about this. 5 years ago in India, people would say, oh, if there is a doubt about the disclosure, don't disclose. This is off record. Yeah, just to be very clear. I don't think anybody followed that. But in the US, whenever you're in doubt, just disclose. Whenever in doubt whether you need to take an approval or not, don't spend tons of money on lawyers. Sorry, Akila and Amita. Just go and engage well, engage transparently with the regulator. And it may take a bit of time, but you will have a much sound sleep at the end of the day. And you'll be applauded by the markets for doing the right thing at the right time. Right. So all in all, what am I saying on the board? I don't think the text has changed insofar as responsibility or obligations are concerned for the board member. It's just that the board member today has to bring in a lot more than what they have done it in the past, where the mindset was only compliance. Now it's about business building. It's about doing the right thing in the context of what's happening in the region, what's happening across the world, and how can you be a market leader? Because eventually you're going to get tested on what you brought to the table rather than just ensuring that everything was compliant, right? So that's on the board. Very quickly on 60 seconds, and this is a bit of a comment to the industry because we can't just comment on other people, we have to comment on ourselves. The point that you talked about, some of the other stakeholders, the CEO conversation, and blah, blah, blah. Again, without getting into the specifics, please appreciate, as I mentioned, that at the end of the day, a private equity investor, so far, or investors always used to think we are giving capital and therefore we will decide what needs to happen or we will deploy money on the back of one person and go away. I don't think it really works that way. You have to have a mindset of a business builder. You have to have a mindset to keep tracking from time to time what is going wrong, what could potentially go wrong, and how to really align everybody along. As I keep saying, it's alignment, alignment, and alignment. Have the mindset of fixing problems, anticipating what the problem could come through, and if they ever come through, you fix it and you build on from there. So that's the new class that we stand for. And that's the expectation of this industry now. That going forward, if you do all of those things right, yes, you will have some situations here and there, but a private equity player or a foreign investor or a responsible stakeholder can really get to a spot or can make the company get to a spot where you don't have public embarrassment.
Okay, thanks for that, Himanshu. I would like to bring in Akila or Amita, whoever wants to go first. He basically touched upon two issues here. If I was to recap, he spoke about from the role of the board perspective that sophisticated investors need sophisticated board members. They'll need to do more. than what they were supposed to be doing earlier, than just having a checklist in front of them and ticking the tick boxes that this is really happening or not. And he also touched upon this issue of perhaps the founder CEO versus an external CEO, if you will, if to build a world class company, and how the dynamics can really change. From an investor's perspective, the mindset always really has to be about building a large world class organization and an alignment there, and not really being so overawed by packing one company, packing a founder necessarily. Akila and Amita, who wants to really go first on this? And how do these motivations really change when you're such a high growth startup and you're chasing the valuation and seeing to it that your competitor is not necessarily funded by another large VC fund? So how do you make sure that as a board you are on the right track on some of these things? Yes.
Sure. I'll go first. So I think a lot of interesting questions you have raised, Shrija. To be on the board of a listed company or of a startup or a high growth company in today's day and age in India is a challenge. What we are seeing day in and day out play out is that a board member has to be a super person who is able to be a watchdog, a conscience keeper, ensure compliance, and also ensure shareholder value and maintain stakeholder interest. It's like a huge task, and we are seeing this play out in different ways. And what on one side we see highly active independent directors. There is a majority of the Indian listed boards have undergone a huge change in the last 3 or 4 years, at least personally speaking, what I have seen. And the tick box approach no longer works. We see a much higher participation of independent directors when it comes to a corporate transaction, when it comes to a related party transaction, and every investment dispute, a shareholder dispute, frankly, at the first level is played out at the board level before it's played out at any other forum, right? So we see a huge role played by directors, especially independent directors, when it comes to managing and balancing interests. And I think we also see the flip side of it. We see independent directors also trying to run the business. We see a little bit of an overreach in some places where, in their enthusiasm to be conscience keepers, sometimes they interfere in the management. So we have seen all kinds of things play out at boards, and it is not an easy job to be a director in this day and age. And that is where I think it is important to get good advisors to make sure that you are complying with the spirit and letter of the law, but at the same time you are aware that people who have invested in the company are investing not for the board to run the company, but they have put their faith in the promoter or the management or the existing management. I don't even want to go into whether it's a founder or a professional or whatever that is. People value expertise. The board is a separate function than management, and these twin engines should run and run smoothly for everything to be working well for the stakeholder, right? I think Himanshu mentioned about alignment of interest. When everything is going well, business is doing well, there is no COVID, there is no external factors and disruption, everybody's interest is aligned. No problem, right? No problem in complying, no problem in making sure everybody's happy. But when disputes happen, I think that's when the board's role becomes even more nuanced, because it is not only to do justice to all the laws of the land as far as governance are concerned, but also seen to have done justice. And that's a huge task, because not everything is recorded, not everything is put on, is available to be proved. So there we find board members struggle a bit in making sure that they are doing the right thing, and tomorrow they are not pulled up, because today the regime is, I wouldn't say brutal, there is a lot of safe harbor for them as well, but then it is not easy. They can be pulled up, they can be questioned, things could get uncomfortable. So that's where I think the job of a director in any kind of board, startup, listed, old economy, new economy, is no longer easy, and it requires some people of very good mettle. Your second question on founder and external CEO, I think it's important that the laws that we have, the regulations that we have, should preserve the entrepreneurial streak that is going on today in the country. I think in our enthusiasm to kind of regulate, we should not miss the big picture that we have reached so far because of the people who've taken the risk, who've taken the call, and the who've had the appetite to bring companies to a certain level. So I think there's some kind of balancing, and I think it is already being done. If you look at it, there are so many sectors which are today high growth are not regulated. People ask us, like, when especially people from other countries, when we do due diligence in some of the sectors in India, I'm not going to go into names, they're surprised that these sectors, there are no licenses, there are no laws. We can transfer some kind of data very happily all over the world, and you don't have to get consent. People are very surprised at the kind of regimes we have, which is actually fostering more growth and giving about a huge fillip to this whole entrepreneurial streak that we had, the whole unicorn story that you mentioned. So I think, whilst it is great, as Himanshu in his opening remarks mentioned, that we have a very robust set of regulators. They are talking to each other much more, not only amongst each other, amongst various divisions, but even to each other much more than they used to. There is more transparency. It is easy to get things fact checked with them before we do anything. But at the same time, there is also a little bit of gray, which helps growth. And I think that's where the management, the board, and the rest of the stakeholders, like such as investors, proxy advisors, all of us should be conscious of not disrupting the great story that we have today. So that's my initial remarks. Amita?
Akila, that is beautifully put and a lot of interesting takeaway. That's very well put answers to my question. I must say this. Amita, I would love to sort of hear from you also. We heard from Imanshu and Akila, a lot of interesting and sort of divergent views also coming to the fore. I wonder what really is your view here. Yeah.
So I think my view is really one of the larger questions that you raised on, is there something special that happens on boards of companies, listed companies? I think there's already a lot of jurisprudence that's been laid out, and everybody has a sense of what needs to happen. And we can only see that trend getting stronger and stronger. And what we definitely are seeing that even in non-listed companies, whether it's from a value perspective, because there's actually what Himanshu mentioned, there is a premium that is attached to well-governed companies, even in the unlisted sector, but also in the case of situations where everybody's planning for an IPO. I mean, people are not just becoming unicorns because, and you can't sort of become a well-governed company overnight. So this is all also sort of the runway up to the big listing and getting all the great numbers that we've seen some of the unicorns actually get across in the last year or so. There is something to be said for board governance and the role of that in value. But I just want to comment further on what Akila brought out, that most disputes end up as first a governance issue, or there is some sort of conflict that sort of arises at the board level. And what's interesting and where we see the cookie crumble most often in the actual play out of the dispute is that it never plays out in a linear manner. It never happens that, this happens and then this happens and then this happens. It's always that there are 16 different things happening at all given points of time. And, it's like on the same issue, there is a regulatory aspect. There are at least three regulators looking at that specific issue. At the same time, there's the whole governance and stakeholder angle. So there are shareholders who come in, they have their concerns. So there's arbitration running there. Some founder is not happy, he has an NCLT petition at the same time. So the same issue gets to be seen from multiple perspectives, and they're all sitting and overlapping one on top of the other. And that's when I think the conflict of boards becomes even more conscious, because there is never a right answer. It is only right for that particular situation. There's no one right answer. It is what you've done right. And often we see that, even if the substantive issue is not, say, something that you could have gone this way or that way, if process has been followed, if there was diligence in the way you'd made your decision, there was actual recordal, there is the fact that you've considered multiple perspectives, you've tried to find that trade-off. It takes me back to the story I read my son every night, the Goldilocks principle, that everything, I mean, it has to be just right. It can't be too long or too short, or that Goldilocks principle really plays out in boards and disputes, as we see every day. So I just wanted to add in that comment on that.
Thanks for that, Amita. And I think we had some very interesting conversation. Wow, what a start to the discussion, and such views coming on really what is the role of boards, different stakeholders, proxy advisors, independent directors, and of course, most importantly, investors when you are faced with situations like this. Interesting comment that the role of independent director, where we are in the environment right now, is an increasingly difficult one. In fact, uh, the way Akila put it was the role of a super person. The superman or a superwoman kind of an image. You're supposed to have various powers vested in one person. And I think the sheer amount of responsibility and pressure is humongous, really. I want to take this conversation a little forward and also to talk a little about litigation financing and the role of litigation, the recent litigation here. As an asset class, litigation finance has outperformed other classes like real estate, private equity, hedge funds, and credit. Now, with this recent trend of litigation for enforcement of rights to stop third party investments, what are some lessons to be learned? Maybe Himanshu, you want to start with that and then I'll get on to others. Yes.
Yeah. No, I think litigation financing, if I've understood right, as in on litigation financing, I would say it's been a great asset class outside India, for years, and it's only growing. And there is a lot of interest. At least while we have sort of considered this as an asset class, so far we've not been able to really capitalize on it for a variety of reasons. Number one, delays in the court process is still a factor. So today you can't run a model that you would have this kind of recovery in what time. So at the end of the day, whatever we do, it has to come through some financial matrix, and consistency or time period around when the dispute is gonna get settled is very, very important. That's number one. Number two, there is no repository today to really see a pattern of how the disputes really evolve over a period of time and get adjudicated upon. One court behaves or looks at things very differently from the other, and which is in a good way, because at the end of which is a good thing, because at the end of the day, the courts are also representing the society's sentiments and impressions. But at the end of the day, when you talk about commercial dispute, it has to be one and all across the country. But the jurisprudence around some of the very, very basic items still, I would say, is very different from when you talk about one high court to the other, to the rest of the country. So that's number two. Number three, I think we have some laws that we need to really amend, the CPC and all of that stuff. I won't get into all the details there. So all in all, I would say that it's definitely an area that the government is really focused on. We've had several engagements with the relevant stakeholders in the government on this. It's one of the areas which should come up, but I just hope that some of these issues, which have been there for a longer time, the delay, as I said, repository, different high courts, different courts, and all the way things go to the Supreme Court, and people always pray what would be the outcome. So there's less predictability in terms of what lies ahead, along with the fact that some of the laws have to be amended. So as an investor, you want to see all of that as in some form or shape or in some box before you start writing checks on that.
Okay. Akila, I also would like to get you in. We have spent some time on investment related conversation here, and let's now also get to the shareholder conversation. My first question to you, Akila, really is that, and you made some pretty interesting comments on how you see the role of the board evolve, of course, in unlisted companies, and how it has perhaps, and I'm also weighed in very well in terms of that. Perhaps they also have to go in through their own learning curve, as some of these companies are not just being unlisted, they're all vying for a public float. And ultimately, the idea is to have a sustainable public float. And they are taking steps there because when you are unlisted, a lot of it uh, does not really come out. But when you are listed, the fact of the matter really is that there's an analyst who is combing through your numbers on a quarterly basis. And there, some of these concerns become much larger. My question to you, the two questions. The first one really is that if you look at the way the private equity industry evolved in India, there was a time when we were essentially growth equity, minority investors. You were always at the behest of the entrepreneur. And some dispute issues always came then. But we have very well managed to become a very controlled deal environment. And of course, there are funds like Blackstone and others which have taken charge. Do you think it is also by virtue of being in the controlling position perhaps that some of these areas, some of these factors don't really arise? Or your quick comment on that, and then I get into a more detailed shareholder conversation with you. Yes.
No, I think Shrija, you're right. As practicing lawyers, we discuss how nowadays most private equity transactions are controlled deal, and what is strategic and what is financial is now kind of blurred, right? So if when in fact, we have within our firm, we have a separate set of lawyers who do private equity transactions and separate set of lawyers who do M&A transactions, but we exchange notes very often because a lot of private equity players today are strategic investors. Like, some of the, if you look at like Blackstone and others, they have interests which are higher than what a lot of strategic people may have in certain sectors, right?
Himanshu is
So
smiling.
Abdullah is responding to my comment that don't spend a lot of money on lawyers. I think that's where it's coming from.
Yeah, so having said that, so you're right, I think that is a huge it speaks for what India stands for today, the kind of comfort people like private equity players have in taking controlling stake, taking risk, getting professionally managed people at the helm of things and running things on their own without the support of Indian founders, Indian promoters and the like, or sometimes on a joint venture model as well. So that definitely is the story now that is playing out. We do see it more often. And sorry, your question exactly was, Shrija?
on on disputes related, do you think there are more lesser dispute
Disputes, yeah.
cases in some of
So
those
yes,
areas? Do you think?
so disputes happen in any company when interests are not aligned, right? So typically, it happens in a company when there is a promoter who wants to do certain things, who has a different kind of vision, or he has conflicting interests, or there is a related party kind of a transaction, or the company is at stress and people have different views on what should be done or how things should be run. So when there is a minority and there's a majority, there's bound to be conflict. That is one kind of dispute. Another kind of dispute that we have seen play a lot, especially with private equity players, whether they're minority or majority, we notice that even when sometimes they come in with a controlling stake, obviously since they are funds, exit is their end objective. So sometimes they want to get out at a certain price, right? So even when they are a controlling shareholder, they want to make sure that, as you said, if they're entering into a pre-IPO stage, they want to make sure that the path is clear for them to exit through an IPO or through some other means at some point in time. So there, the key dispute arises around valuation. So if the private equity player is a minority and who's assured some kind of exit, now at least the dust has settled as to whether he can get an exit and whether that exit is enforceable. Of course, exits are enforceable. A minority person can expect to exit. It is only that he can't expect an assured return. So that, at least that bit of jurisprudence is very well settled and a lot of comfort to a lot of investors now. And we lawyers devise various alternative options for them to get the kind of exit that they have envisaged when they invest and they kind of support the company at the growth stage. Now, most disputes arise when there is a mismatch at the on the exit price as to what is the expectation of the exit, or sometimes on the kind of exit, as in whether it should be an IPO or whether it should be just buying back that person or a trade sale and stuff like that. When the private equity player is at majority, the exit normally is when to take it to IPO or how to take it to IPO, who should be called the promoter, who should divest how much. So there are different nuances around that. So the interesting thing is, I think again, I'm harking back to what Himanshu mentioned in the beginning, that enforcement is still a very big deal. That's why we lawyers have a job, but it is given a lot of comfort for investors that they don't shy away from enforcing, in the sense that they know that there is light at the end of the tunnel.
Yeah.
There was a philosophy, say 10 years back, that most private equity players may not take the investee company to court or to arbitration. They used to shy away from litigation, and the entire focus used to be on settlement because funds don't fight it out. They don't want to get into that whole Indian judicial system. That has really changed. Now we see, of course, everything begins with arbitration. There is a lot of time before it reaches the Indian courts, but still we see there is a lot of appetite fund houses, for financial investors, and even for promoters to go in for litigation, because they realize that that's where things may work out. You don't have to settle, you don't have to compromise. There are laws, there is possibility of enforcement, and we can work it out through our dispute resolution process. So I think there is a approval for the process that we transaction lawyers draft, and the kind of clauses that we painstakingly spend time on do get read at some point in time, do get interpreted and enforced at the right forums. So yes, these are the kind of disputes that happen, and I would say that we are seeing a higher appetite towards getting things enforced in a judicial or arbitral stage rather than just compromising.
It's about time that promoters sort of don't take private equity guys just for a toss. And I do hope that promoters are taking notes of this and understanding the nuances of this. Build a large organization. It is capital, but capital that comes with responsibility. You spoke about the private equity disputes and what can arise in the minority majority situation. Let's spend also some time on the shareholder disputes, Akila. In terms of what do you think really are the major triggers for the same? What do you really think is a preferred forum for the shareholder dispute resolution?
So maybe Amita is the expert on it. I'll just talk briefly and let Amita delve
Sure.
into this in detail. There are several forums, as you know, for shareholders, depending on how much shares you have, right? So depending on your ability to meet certain threshold, you have the access to certain forums. So if it is an oppression and mismanagement claim, you need to have at least 10% in value of that company. But if it is just a complaint, so you're just unhappy with something that's happening, you can write a letter to SEBI. SEBI will take you seriously. They will look at your letter. They will talk to the company about it. So the forums are a lot, and the nuanced questions that arise is, which is the right forum? Is it okay to go to multiple forums? Can I get multiple remedies? Which is the best strategy to take? And that's where people like Amita will help you to say that you first go here, then go there, file in all four places. So that's the whole litigation strategy that is now the game that is played in every kind of disputes that you see. But just one point I would like to make also is that there are a lot of nuances of law as to the right forum, which is not always strategy, but not everything is arbitrable. There are some disputes which cannot be arbitrated. There's some disputes which can be. So I would just stop here and ask Amita's expert views on this, on the right forum and the multiplicity of forums available for today's shareholders.
Yes, Amita.
Thanks, Akila. Thanks for that. I think she has a great question. And the fact of the matter is that, shareholder disputes come in all shapes and sizes. And,
Sure.
while we think of it from a majority minority standpoint, I think very often shareholder disputes arise because there isn't a clear majority or minority. It's a dispersed shareholding. There isn't one clear person. Then there is the whole question of de jure control versus de facto control, or you sort of cobble together some sort of, you lobby with the other investors and you sort of create a pool, and that creates a lot of friction amongst shareholders, and that eventually is what has always been the core issue of any dispute. I mean, from times immemorial, is the question of control. Who gets to decide what the company will do? And that is at the core of any dispute, and that's not just for company law or shareholders. That goes back from time immemorial. And so when it comes down to this, where there isn't a very clear answer. It isn't a clear case of, okay, this I'm enforcing this specific shareholder right. I'll invoke arbitration, or I'm assisting this particular minority oppression. I'll go to the NCLT. If I have 10%, I know I have a straight out case. If I have less than 10%, I can apply for leave of the NCLT, because that law has also become very clear right now. And NCLT gives the leave. There are very clear principles that have been set out, and you can actually approach them as a forum. Where people actually end up in shareholder disputes is that we end up filing, and that's the whole litigation strategy. You file in as many places as you can to create the best kind of leverage that you can for a settlement. I mean, you have to sort of think of this as not an either or. It's not that people file a case with the intention that they will take it all the way to Supreme Court. They file cases to create the kind of leverage that will allow for a feasible conversation around a commercial settlement, because at the end of the day, all parties are actually commercial parties. They are trying to figure out what is in their best interest, and they're trying to figure the best way to get to that other side. in the most in the manner that will most effectively give them the outcomes that they're hopeful for. And I think that's where it goes down to the issue of, when you don't have a clear minority, you don't have a clear majority, you will bring in all the other kinds of forums. Like, for instance, the ROC has become extremely effective as a forum for people to raise concerns as shareholders. So you just write a 206 complaint, ROC starts, asking for information, and that really creates a lot of concern. There's, of course, for the listed companies, SEBI is a very, very active regulator. They don't actually think that any complaint is too small. They will be very clear that, this is something that we will take up, we will get a response, they will ask follow-ups. They're not going to treat it as just a post box. They ask very intelligent questions. They don't just forward the complaint and say, give us some reply. They will actually go and ask you some clarifications that are very important. So, SEBI is a big role. RBI is also taking a much more conscious role on the fintech related side, and all the other companies where RBI is overseeing or is a regulator. So, as a holistic reference, if you think of shareholder disputes, it's never about that one contractual term. And that's the point that, we all have to sit back and look at. I mean, even some of the big high profile disputes that we're seeing today, they're actually looking at, what is the intention of the parties behind that, which is what we will try and preserve at an interim stage as well. It's not gone down to just, oh, does this specific clause apply this? So, nobody's taking a pedantic approach to investment clauses. And that's also really important. I think there's a lot a lot of comfort that investors would take out of that. That there is, we're not going to be just thrown out because one particular clause was not replicated in the 16 documents that we've created for our suite. So all of these adding together to finally see where parties move forward.
Thanks
I
for
think,
that.
the
Yeah.
last point, sorry to just add, I think the last
Sure.
point really resonated, that it is not just what's written in the contract. If you look at the way it's played out in the arbitration orders or the court orders, equity is now playing a huge role in how things are interpreted. So the intention of the parties, the bigger picture, what they would have thought about when writing it or agreeing to it, is actually playing out, and I think that's an interesting aspect that we see.
Okay, so my question, and it's a very interesting discussion, and I want to sort of understand this, that there's too much capital available now. You're hearing these sound bites. It's the best time to be an entrepreneur. The floodgates have opened. Himanshu began his conversation saying this is the first time perhaps the train is moving in the right direction. You have SoftBank here, you have Tiger Global here. Name the fund which is already in India. There's too much capital. Perhaps the opportunities of the best opportunities are perhaps limited. It's always been the case of private equity in India. Too much capital chasing too few opportunities. And then at this point of time, Akila, you mentioned, and Himanshu also mentioned, that private equity funds are not shying away from enforcement. So, is it a risk for a PE fund really to portray itself as a tough cookie when at a time when capital is a commodity, and as an entrepreneur or promoter, I have choice to raise money from somebody else also? So, so how difficult or easy that equation really becomes an environment when capital, in fact, the venture industry, I would say, if not necessarily so much private equity, is so highly commoditized and just being seen as a high margin capital, nothing more, really. Interesting question, I would say. And who would like to take a stab at that? Yes.
I think the tough cookie should answer first.
Oh wow,
I mean,
women are really having fun on this panel.
I am.
Himanshu,
Can you
really.
imagine? I'm bringing the real diversity to this conversation. It seems.
Yeah.
But I would say a couple of things to this. It's a very, very interesting question and has to be dealt with a lot of responsibility. People have to be conscious of this topic when they really talk about some of the nuances. I'll say a couple of things to this. Firstly, as I mentioned, that there are types of investors now. There are lots of investors who believe that yes, we will invest on the back of somebody, and we'll just give the capital, and that's it. Nothing beyond than that, right? Then there's an investor who says, you know what? Perhaps this is a great neighborhood to invest in. If I don't have an opportunity, I will create one. I will curate one, which is called greenfield versus brownfield, right? So when we do We take pride in saying that in this country, we have done the maximum number of control deals. We have also started doing growth investments. The first check we put in day before or signed the deal, Express Peak, one of the leading logistics companies. So we deal with topics when we are dealing with traditional businesses, large traditional businesses. Then you are doing minority investments on the back of the management and the technology and the space that they are in. And the third space is where you create something. So investor, unfortunately, is just seen either in the minority bucket or in a majority bucket. But there is another bucket that is available, not to be missed. That's where the quality investors would come in, who do not have only the mindset of getting a fixed IRR, as we talked about, but they will create a business, build a business, and monetize the business for one and all, right? So that's a big space that's coming up. Not only just in the operating companies, you talk about logistics space, you talk about real estate. There are so many areas that are coming up where there exists no platform or no founder to really help you make money. So when you have a lot of money, you have to also think differently. This era is very different from the era that we saw in 2000s, right? So that's point number one. Point number two, on your dispute part, I think there are two parts to this. There has been a bunch of incidents where private equity just came forward and muscle through these situations because they had more capital to either destroy somebody, destroy the business, and use that sort of backing to really drive the right outcome for themselves. So that's been one category. And the other category is where firms have taken the responsibility for being a fiduciary to our LPs or their LPs, where a contract is written in the manner it was supposed to be written. It is not subject to interpretation, whether 16 contracts or 20 contracts, notwithstanding the legalese around it. But if somebody is being defiant to take away your right, the market, hopefully, the LPs expect you to stand for it, because private equity investors are not putting money from their pocket. They're also a custodian, they're also fiduciary to the investor. So not taking an action on a contract which is clear, and somebody is somebody is part of defiance, or call it fraud or whatever, at that time, I think the time has come, market is mature enough now to appreciate that the investors would come forward, have a clear conversation, will not use the might of the backing that they have, but they will use their common sense and drive the right outcome for all the stakeholders, than being too timid about the fact what the market would think for being tough on any promoter, founder, or any other stakeholder in the company.
So, Akhil, we heard from the tough cookie. So he is sort of right on in saying that ultimately we also have fiduciary responsibilities. We're custodians of our LPs are there to also back us, and just to be timid for market perception, when there's defiance, you have to go up. How would your response to? I think it's an interesting question these times. We need to sort of spend some time on this. Yes.
No, I think I completely agree with the thoughts shared by Himanshu. And going back to your earlier point, we have seen a lot of change in founder behavior or promoter behavior, right? As in, lessons have been learned in the last 6 7 years. There was a time when even an angel investor will just send a term sheet, leave private equity, and the founder will just sign on the dotted line, no questions asked. Money is only thing that mattered, and there was no vision beyond the next day and the next year, and stuff like that. But now we see founders have a vision. They have a lot of faith in their own business, in their own story. So yes, money definitely matters. Private equity firms and funds will obviously have an upper hand in several of the discussions that relates to investments. But then the founders have shown a lot of grit in making sure that their interests are taken care of. Unfortunately, what we sometimes see is that our laws do not really support them in the kind of rights say a Zuckerberg may have or a Elon Musk may have. Unfortunately, we do not have that kind of flexibility in structuring options for founders. But then we see that they do. Maybe it is the availability of capital, maybe it is the India story, but maybe it's also the lessons that they have learned in the past. Because we have seen instances where companies go on IPO and one investor with a 1% stake or a 0.5% stake is holding the entire deal to ransom. Or we have seen situations where subsequent rounds like a Series C or a Series F is being hampered by some friend who was invested in the initial stage. So I think now in our experience, like firms like us who you would think only cater to big private equity firms like Himanshu's, we also cater to like small startups because they
Akila
realize
doesn't do. Firm may do whatever, but Akila only works for all the big guys.
I work with everybody. That's the story. That's the point I'm trying to make. People
Yeah.
have realized the value of advice, and we've seen people like who are out of IIT call us up and say, I am trying to set up. Should I sign this? Should I not sign this?
Wow.
People have realized that what you do with your angel investors and your Series A and Series B matters up to your IPO stage. So there is a realization. Maybe it's like part of our journey as a country and as a the whole India story, the way it's panned out, which is for the good. So it's a well matched story that happens at time of investment at PE stage.
Yeah. Amit, I want to add to that. Any quick points? You heard both your
No, I
colleagues
think
making
I
points.
just wanted to leave one point on the table, which is that, I don't think that there is too much capital. I think, the fact is that there is, the fact, because there's a lot of capital, there's going to be a lot more opportunity. I mean, more people are going to go down the entrepreneurial journey, and that's what's going to happen because water is going to find its level. I think we should not assume that what we are seeing over the last 18 to 24 months of, of the big change that Akila and Himanshu discussed is just the flux. I mean, it is the transition, but I think water will find its level and the capital will find its role and entrepreneurs will find their rights and all of that will sort of add itself up in the next decade.
The only
Okay.
thing I would add to that is
Sure.
also you've got to watch out what's happening to other countries in the region, especially China. So, suddenly the funnel has moved in one direction. At some point of time, I'm not talking about valuation. I'm just talking about the space,
Yes.
especially what's happening in the tech space, ed tech, fintech, and all of that stuff. The reality is because some of the other markets are shut for a moment, hopefully, India is benefiting. Other than the fact India is producing great companies, great founders, technology is right on the forefront. But I think that macro trend always needs to be kept in mind while discussing this.
There's so much to discuss, and there's so little time, unfortunately. But what a lovely discussion! I would like to spend one sort of last minute that we have about the next 7 minutes. One question on maybe the regulatory dispute, and an interesting question that tax authorities and the increasing role of tax authorities in scrutinizing deal terms, pre-deal materials, and structures with a fine-tooth comb. The question really is, and for this very meaningful panel, that what are some key takeaways from competition commission litigation around investment agreements, which I think should be addressed meaningful for audiences here. Yes. Amita, Akila, who would want to take this?
So I think Himanshu actually also maybe maybe Himanshu you start and we'll sort of end the.
With this able company, you're putting me on spot. No, I'll keep it short. I think the regulator has done a phenomenal job in reaching where it has reached. If you think about it, it's still a new regulator. I'm talking about Competition Commission of India. I guess your question is around that. I'm not talking about SEBI and RBI, which I mentioned. They are playing a very different role altogether. Needs to be applauded. We have seen REITs. We have seen many very sophisticated products come in. So but those are established regulators. Insofar as CCI is also concerned, I think they've done a phenomenal job. Very business friendly. Yes, there have been litigations. There have been litigations on both sides. But all in all, at least we have seen, and again, we take pride in saying that we are the only private equity firm which has taken maximum number of approvals on both sides, gone through some of the legislative amendments that we have seen from time to time. And the only thing I would say is that it's one of the very rare regulators, if I see it across the world from antitrust commissions of various countries, they always lean forward to appreciate the legal part of it, how the law has evolved in other jurisdictions and how we are seeing it. So they're always leaning forward. And number two, they are also very open to the idea of appreciating the business nuances, because that's one regulator that affects the heart of the business. If, especially when you talk about, forget about private equity players, but when you talk about hive ops, when you're talking about, divestures and many other things, that affects the very business model. So if you, as an investor, as an applicant, or as a litigant, if you have the approach of leaning forward to, you come forward, communicate clearly, communicate responsibly, and engage beyond the letter of law, I think it's destined to go to a right spot. So, that's where I think we need to do a little more as an industry, as lawyers, as private equity players, go out there, spend more time, not educate, but share our experiences and make this regulator a world-class regulator. And I feel it's already getting there for the kind of approvals we have seen. So that would be my thoughts. I hope I answered that question.
Yeah. Any quick
I
comment on that one? Yes.
Yeah, just to add to that, I completely agree that the CCI has been an excellent regulator, especially in the time of pandemic. They worked so wonderfully, and we had no issues in any of our transactions. They were so nimble and proactive. But I wanted to share one thought that I have found when we execute transaction is relating to tax. Firstly, tax is the driver of most transactions, and there is absolute uncertainty on what will be the tax. Even to make any tax counsel tell you what is the rate of withholding, or the rate, whether it's a capital gain or whether it is a GST implication, or will it, what it is, the categorization of a particular transaction. Even if you hold a gun to their head, most of them will not give you a straight answer. And that is, to me, like, after so many years, so much of jurisprudence, so many great tax brains that we have in this country, is quite sad, is how I would say, when it comes to structuring and executing a transaction. And specifically, one point I would like to point out is when we do schemes, the tribunal sends out a notice to the tax authorities asking them to let us know, if there is any issue in the particular demerger or particular merger. And very rarely do we hear back from them, and the order is normally passed, the scheme is done, everybody goes home, everything is effected, and then the tax guys wake up after 3 years and come up with a googly that this demerger is actually a dividend distribution, and that kind of rocks every future structure that we're doing. So I find it a little, when everybody has upped their game, whether RBI, CCI, SEBI, everybody's upped the game. Somehow I find the tax authorities are still a little in old school, I would say. I don't know what the reason is, but they're not as, I wouldn't say friendly. They shouldn't be friendly, but I'm saying they should be a little bit more proactive in engaging with corporate transactions and not only look at things from a revenue perspective. I think that's one thought I had.
Okay, that's a pretty bold kind of dispatch going on to tax authorities. I hope they are listening to this. Uh, really, and I think we should definitely spend some time here. I mean, what a lovely discussion and what a great end to our series. Seriously, last 5 minutes. Actually, I have 3 minutes here, but this entire ESG conversation, how much of that is construed as greenwashing? I mean, what really has changed with this entire soundbite of ESG becoming more and more pronounced? From a distance, does it not look like a lot of greenwashing also happened there? I would like to understand a very honest view here of the panel here. Yes.
I think go with this first. And, I think ESG is going to be, when we're not even scratched the tip of the iceberg. I mean, I think we can sort of see that there is an iceberg. Everybody's sort of screaming and saying, iceberg, iceberg. And that's all we are. I mean, we've not yet touched the rest of it. And part of the greenwashing sense is largely, Shrija, because companies don't even know. I mean, they're sort of really struggling to understand how to sort of go down this path, because it sort of rolled out pretty quickly. I think over the last 3 years, we've seen a huge take up on it, and it's still, it's like an avalanche that's still in the making. And the reason that people think it's sort of greenwashing is because sometimes people end up in that space of fake it till you make it, and that's probably why you feel that it's sense of greenwashing. But I think the intention, many companies have the genuine intention of picking up the pace on this. They understand the importance of this, even for attracting good quality capital, or even just answering the sustainability question. But a lot of this we will see how it actually plays out post April, because a lot of the SEBI norms come into play, the BRSR reporting, etc. We'll see a lot of that, actually play out. We'll see, you'll actually create the kind of market recognition, market reference to this. There will be, actual precedents that people will open and say, okay, this is how they did it, and that's how they will learn. Right now, it's too nascent for people to really break it, and it could either be too big or too small. And again, you have to find that right balance for each company.
Yeah, my
Interesting.
view is
Yeah,
on this.
Himanshu.
This is not a legal topic, honestly. That unless if this is one of those governance topics, right? The
Yes,
market will
yes.
tell you that you stand for it or not. Anytime you try and mandate something, it is not going to get done. It has to come voluntarily. It has to come within. And according to me, ESG is the way to go. When you talk about fundraise, when I travel even across the world, people are saying, you know what? Don't show me what you had earlier. Why can't you have ESG as impact investing in financial sector? Why don't we have diversity? Why don't we have inclusion on our chat in our organization chart itself? They're asking questions. So forget about what they will ask you for the portfolio company. So in short, I will say that it's a massive theme. It's a driver. You'll get a premium for it, and let the market sort of decide what is the right form and substance of ESG than being mandated by a statutory law.
Okay. Any thoughts from you, Akila, on this one, that it can't be shoved down the throat? It has to be voluntarily, is what
No,
the.
nothing further to share. I think Himanshu and Amita have made all the points.
Okay, it's time for rapid fire, but I think one concluding remark from each of you on how this entire dispute environment is sort of evolving here, with so much private equity capital also coming in and so much at stake. One concluding remark from each of you, and then we quickly get into the rapid fire. Yes.
Amita?
Sure. I think my point on this is, please take a 360-degree view on what kind of disputes. I think you can't anticipate them upfront and assume that there's only one kind of conflict that could come up on investments. I mean, I think stakeholders are getting a lot more active across the board.
Okay, Himanshu.
I would say it's India. Everything goes slow, but everything gets to the right spot. So believe in it, be in it to win it.
Okay, yeah, Akila.
I would say I don't wish it on anybody, but if it happens, nothing to worry. It's not just prayers, there are other remedies available.
Okay, let's do a rapid fire and a quick one because we don't have much time. I'll begin with you, Himanshu. This is our last dispatch. How about we talk about anti portfolio? Blackstone's anti portfolio in India, what would that really be?
Not having ESG there.
But it's not there yet, right? Okay.
We always follow it. As I said, it's voluntary. It's even if it's mandated, we'll still have the best norms. So that would be our take. Not having ESG is being anti-portfolio.
Okay. I'll come to you now, Akila. One piece of advice you would have for startup founders, what would that really be? Especially who are starting out in
I
2022.
would say don't be penny wise and pound foolish.
Okay, Amita, I have a question for you, but I had for Himanshu on anti-portfolio. One deal which you thought maybe done by some other legal firm or law firm, which you thought, oh God, I wish I could have done this, I could have done it better, or that sort of really overawed you from a distance. Yes.
She will do every deal better than anybody else. Let me tell you.
I agree
No,
with that.
actually, I want to do disputes
Oh wow, so
now.
much, so much of praise coming your way, Amita. Really.
No, no, not at all. But honestly, I'm much more in the dispute space right now, so I'm not actually advising. And there are a lot of disputes out there that I feel that we could do. There is something that's left on the table, so not in my place to name any right now.
Okay. Any last comment from any of you on the Bharat Pay issue that really is a debacle sort of unfolding, and any sort of last comments on that one? What are you all making of it, and what does it really mean for the fintech industry in particular, and for the investor founder community at large? Because we're not hearing much sound bites from others too.
I
Akila?
think a lot of what we've discussed, applies to every kind of dispute, leave alone Bharat Pay dispute, and I'm sure that should resonate with anyone who's applying it to any particular dispute. Um, so,
And I'll say, because there is no other news going on in the last 3 4 days, perhaps in the country, so that's why it is there. Let the people take sort of decide on what's the right outcome for themselves, whether it's board, company, or the founder. I'm sure there are sides on both on both sides of the aisle. So we got to just respect it. I think we got to just allow them to have their own space and let the right outcome follow that.
Okay. But I must say this, we had a lovely discussion on what a topic and what a great end to our series Winning with Antifragility. I do hope it had lessons for everybody from founders to investors to other shareholders. And we discussed so many things, the role of the board, from litigation financing to money resolution to taxation, advice for startup founders, and so much. So till the time I see you next, goodbye and good luck. And thank you. Thank you, Akila, Amita, and Himanshu for joining us. Thank you so much.
thank you,
Thank you,
Srija, for
everybody.
having us. Thank you.
Thank
Thank
you.
you.
Thank you.
Thank you, everybody.